Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm Emily Parker, filling in all this week for Christine Lee. Joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn. Good morning, Lawrence.
Hey, Emily, how are you?
I'm good. How about you?
It's a dreary day in the Northeast.
As usual.
But aside from that, yeah, of course, all sunshine.
Well, the crypto community is pretty happy because Bitcoin has crossed $50,000 for the first time in 3 months. What do you make of that, Lawrence?
You know, yesterday morning, you saw this massive flow of about $1.6 billion in Tether go into Binance. The price was at about $48,000. And right when that happened, you know, of course, I had all my alerts going off and I was like, oh boy, this is interesting. I wonder what's going to happen. Actually, you kind of knew what was going to happen. We were gearing for a rally, and that's kind of what we got here. Seems to be a lot of interest going in right now into buying Bitcoin. The question is from whom? That remains to be seen.
Let's take a look at Bitcoin now. So the CoinDesk Bitcoin price XBX index is currently trading at over $50,000. And the CoinDesk Ether price ETX index is trading at over $3,300. And the new DFX CoinDesk DeFi index is trading at $729. So
pretty big jump there.
Lawrence, I mean, what do you think is happening with this? You know, what's interesting about this $50,000 mark is that this week we have the infrastructure bill going through Congress. There's been a ton of regulatory uncertainty. I find it really striking that given all this regulatory uncertainty, given that we doesn't necessarily seem to be a good result. We have the crypto industry really up in arms about this crypto tax provision. And then we have Bitcoin kind of reaching this high that it hasn't hit for 3 months. I mean, what do you make of that?
Look, I think we do have a lot of what would otherwise be bearish pieces of news out there. But again, there are market dynamics that have nothing to do with fundamentals sometimes. And that could be what we're seeing here. And when I say nothing to do with fundamentals, I'm talking about the global macro picture. The global macro picture is up in the air right now. We have a question of, for instance, whether or not the Biden administration has any, I don't want to say gravitas, but any ability to get its policies through. I think the issue with Afghanistan psychologically will have an effect on the markets that we can't quite quantify just yet. But we might look at it down the road, at least when it comes to equities, when it comes to other markets, and say, you know, that was a turning point, or this was a pivotal moment. And then you have, you know, just this kind of the market just looks different than what you see in Bitcoin. And, you know, I think there are things happening amongst the players in Bitcoin that have nothing to do with the real world.
Absolutely.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Whatever your opinions on cryptocurrencies, the fact remains that they are becoming a more important part of the payments world. So said our next guest 6 months ago when he unveiled ambitious plans for his company to support crypto. We're not talking about an upstart in the industry. We're talking about Mastercard, the card network with nearly 1 billion users and over 30 million supported merchants worldwide. Executive Vice President of Blockchain, Dhamodharan, joins us now, along with Walter Hessert, Head of Strategy at Paxos, Mastercard's partner in this new project. Welcome, Raj and Walter.
Thanks for having me.
Nice to be here.
So let's just start off with the most basic question. Could you just tell us a little bit about what Mastercard and Paxos are doing in the crypto world? Just give us a really simple, easy to understand explanation of how you guys are getting into crypto.
Yeah, thanks for having me. And absolutely. So Mastercard is all about choice and providing choice to consumers and partners as they find different ways to get paid as well as pay. So Mastercard has this crypto card program that enables consumers to access their digital crypto holdings that's held at wallet providers. We've had this program for a while. Now, this partnership that we're talking about really is about letting the partners who power those crypto card programs to pay their settlement using a new mechanism. We'll unpack that a little bit later, but this is really about providing choice to the players so that they can stay crypto native, and Paxos has been a key part of enabling that.
Thank you, Raj. Just one quick follow-up question on that. We just talked about how Bitcoin has crossed $50,000. Bitcoin is, a deflationary currency. There's only ever going to be 21 million. So for that reason, a lot of people like to buy Bitcoin and just hold it and just wait for it to go up. So given that your model is based on actually spending cryptocurrency, do you see any tension there? Like, how do you get people to actually spend cryptocurrency, and why would they?
Yeah, look, we're not looking to ask people to spend cryptocurrency. This is really about choice, right? So the consumers have wallets, and if they want to buy and hold, it's their choice. If they want to trade, if they want to provide quick access to different cryptocurrencies that are out there, Crypto Card program provides a choice. It's really having the utility and access and ability to spend at millions and millions of merchant locations around the world in a safe, simple manner. That's what this is about.
So, Raj, crypto was created to be a peer-to-peer payment system when Bitcoin was created, and it's something that was supposed to circumvent intermediaries like Mastercard, like banks, like Visa, etc. So, what is it that you guys are doing that crypto doesn't do right now? And that's also a question too for Walter.
Yeah, it's a great question. Mastercard today has billions of cards in the ecosystem and millions of merchants around the world. And it provides a safe, simple way to access the entire payment system. So that infrastructure is used by consumers around the world, billions of cards, credit cards, and debit cards issued around the world. It's really about providing that safe way to transact. Now, everyone knows that the Bitcoin really is largely used as an investment vehicle today, not necessarily as a payment vehicle. So our network is about payment, and it's the best way to get paid, as well as pay consumers as well as merchants around the world.
Walter, I don't know if you wanted to add anything to that.
Yeah, I think that it's an important role that Mastercard can play here, clearly. And as you mentioned at the beginning, they have 30 million merchants. They have 1 billion customers. And that is a huge network built in a brand that a lot of customers really trust. They trust with their financial cards. They trust with their payments, et cetera. And for Mastercard to be able to make this functionality available in that network allows the efficiency and all of the benefits of this technology to be available to that network. And so it's a really exciting step forward, I would say, for the cryptocurrency and blockchain space, but very much for Mastercard, because now Mastercard can start to apply that brand and that trust and everything that it has done to serve those customers now onto the cryptocurrency ecosystem, make it easy for those customers to transact and use their balances held in digital assets for payments.
So, Walter, I just want to push you a little bit on that because you're from the crypto world. And, as you know, you keep using the word trust, but cryptocurrency was actually invented to be a trustless currency, right? That's the whole idea, that you don't need an intermediary, you don't need a third party, you don't need this trusted entity, like a bank or Mastercard. So I guess it just sort of doubles down on the question of, is this sort of like in some way against the principles on which cryptocurrency was created?
Well, I think if you look at the way that most people are using cryptocurrency today, a lot of them are still trusting entities and companies. They're holding their assets in wallets that are hosted by companies. They're holding and trading their assets in exchanges. And they're doing that because it provides a user interface and a layer of trust that's really accessible to the general public. And of course, you can take those assets and you can take them into your own self-hosted wallet, and you can rely completely on the trustless nature of the network. But in reality, that's probably not the way most people are going to use it. And I don't think it's the way most people are using it today. And so there is a huge part to play for companies that these people trust. and are already entrusting their payments and their financial lives with. And I think that there's an opportunity to merge the two worlds where you can get all of the benefits of cryptocurrency and this new technology all within these trusted brands like Mastercard.
So, Walter, speaking of trust, there's some cryptocurrencies out there that have questions surrounding them as to whether or not they're securities. XRP right now and its situation with the SEC, and also USDT Tether, which is under a lot of scrutiny as to whether or not its commercial paper holdings make it basically a form of security. Will customers be able to use those kind of currencies on the system that you're providing to Mastercard?
I'll turn this question over to Raj, but I think that from Paxos's perspective, Paxos is providing the infrastructure to enable this use case for Mastercard. And Paxos is a regulated trust company. We're building financial market infrastructure with the mission to enable the movement of any asset, anytime, in a trustworthy way. But we're doing this as the most regulated platform in the digital asset space. So we're the first firm in the space to receive a trust charter from the New York Department of Financial Services, which today is our primary regulator. And we've gone beyond that to receive a whole bunch of other different approvals and licenses that give us the highest level of oversight and also access to the existing financial system. In order to be able to do that and to be able to provide this trusted infrastructure and the financial market infrastructure that is being used by financial services firms, we have to abide by very kind of strict rules as far as what assets we can support. And so we're always scrutinizing and evaluating these different assets and making sure that they fall within bounds of existing regulation. And so there is a limit to the assets that we can support as a platform. But I would say what assets that Mastercard turns on probably is or allows into settlement in their network is under even a slightly different is done within different framework.
So Raj, will those currencies be supported?
Yeah, so we outlined, we have not named specific currencies yet. We've outlined a clear set of principles that we will be looking for as we look to support digital currencies in our network. There are three very simple principles. First one is about stability. This is about whether the currency itself can be used as a payment vehicle. So the stability of the currency is quite important. The second one is compliance. And, as you pointed out and others pointed out, there's an evolving set of regulations there. So we'll be looking for clear clarity on whether it's compliant with the applicable, jurisdiction and where the currency is operating. And the last one is about consumer protections, both from a privacy and security perspective. Whether the currency is designed to follow that. We would be publishing, our criteria about which currencies are eligible to directly go into the network, and that's coming. This is about, at this time, we are talking about principles, and this partnership actually provides a mechanism today for these wallet providers to be able to settle using cryptocurrency of their choice, using partners like Paxos. So we believe this is a clear way to add the value to the wallet side of the equation while we are continuing to look at the broad support across the board.
Raj, one final question. I understand that Mastercard is also going to be potentially involved with central bank digital currencies. Can you tell us a little bit about that?
Yeah, absolutely. Governments around the world, as you guys know, are exploring different design aspects of central bank digital currencies. So last year, we announced a virtual test platform for central banks to experiment many of these design choices, how the currency should be designed, how it should be distributed, what features, including programmability and other things, need to be there and to be rolled out. So this platform is available for licensed entities as well as governments to test and design the system. And we are at the core of it. If you look at what Mastercard is about a multi-rail platform allowing businesses and consumers to move value. So we have a card network, that's the most visible one. We also power ACH, account-to-account networks around the world. We really look at this in that vein, in the sense that now governments can have another approach towards designing and deploying digital currencies.
So will CBDCs make debit cards obsolete?
So I'll give you an example. We have Bahamas has Sand Dollar, as many of you know. They've deployed, and one of the very first cards that are available that is based on CBDC is a Mastercard. That card makes that debit, the CBDCs in the Sand Dollar CBDCs accessible everywhere Mastercard is accepted. So it's really, if a central bank were to deploy a CBDC in a given market, the best way to bring utility to that is through our network. So that's what that first card, it's a first in the world. It delivers the value. They gain the safety and security and utility, payment utility that we have across our network is brought to CBDCs as well.
Thank you so much. I think we need to wrap it up there, but thank you, Raj and Walter. That was Raj Dhamodharan of Mastercard and Walter Hessert of Paxos. Coming up, checking in on Asia and the crypto markets update with Rachel Lynn of SynFutures. Time now for the daily forecast, an update on what's happening in Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 23rd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, South Korea's Upbit takes the first step to become a regulated exchange under new rules. So far, it's the only one. The crypto market is on a roll with Cardano and Solana hitting all-time highs. And China expands its eCNY ambitions and brings it to the road. Let's get you up to speed from Asia to the world. First up, Upbit. South Korea's largest crypto exchange has become the first to submit a full compliance report with the country's top financial agency to see if it meets the country's new rigorous requirements for crypto trading platforms. Deadline's coming up September 24th, but so far it's the only one to do so, and that's got a lot of people worried. Industry experts in Korea have raised concerns that Upbit may be the only contender to cross that line, leaving Korea's crypto space going from dozens of exchanges to a monopoly of potentially just one. Forecast News' Danny Park has more.
The Financial Intelligence Unit, or FIU, says it will make a decision on whether Upbit is eligible to operate in less than the 90 days it's officially allowed to consider the report. There are two major qualifications. First, certification by the Information Security Management System. And second, a contract with a bank providing real-name withdrawal and deposit accounts for users. Only 4 exchanges, Upbit, Bithumb, CoinOne, and Corbit, had those bank contracts in place. And while Upbit's deal with K-Bank continues, NH Bank says it wants to wait until both Bithumb and CoinOne construct a system to comply with the Financial Action Task Force's travel rule before renewing theirs. And Corbit has also yet to renew its contract with Shinhan Bank. Lawmaker Yoon Chang-hyun raised concerns about Upbit's growing market share in July, stating that a monopoly would undermine fair trade. One expert told Forecast News that being controlled by the authorities is a bigger issue than a potential monopoly.
한국이 그 디지털 월스트리트의 중심 국가가 될 수 있는데 정부에서 원하는 서비스만 하기 때문에 시대적으로 뒤처지고 경쟁력이 약화되지 않을까 저는 그런 걸 더 걱정합니다.
Right now, it seems it is regulation over innovation in the crypto space in Korea. We will know which it will be in just 1 month. For Forecast News, I'm Danny Park.
Meanwhile, the cryptocurrency market is well and truly on an upswing, if the first trading day of the week in Asia has anything to say about it. Monday morning, Asia time saw Bitcoin breaking above the $50,000 mark for the first time since the crypto market crashed in May. And Cardano and Solana both hit all-time highs. Forecast News' Lucas Caccioli has the latest on what's driving the market deeper into the green.
Crypto markets crashed in mid-May when Elon Musk declared Tesla would no longer accept payment in Bitcoin. But after months of price consolidation, it looks like we are re-entering an altcoin bull market. According to one analyst, this resurgence to a market cap of over $2 trillion and Bitcoin rising above $50,000 came as no surprise.
Bitcoin has shown a lot of resilience since the May crash. So generally what we're seeing right now is the effect of Bitcoin showing resilience, Bitcoin recovering really fast and not falling below 30,000.
And with Bitcoin having secured its position as a potential reserve currency, there's a new battle getting underway.
The battle now is for the smart contract functionality, right? So it's Ethereum, Cardano, Solana, but also a bunch of others like Cosmos and or Atom. Some other projects.
Caitlin says Solana and Cardano stand out in terms of quality, but community strength is also vital as to who will win that battle. For Forecast News, I'm Lucas Caccioli.
And finally today, China's trials of the eCNY continue to expand, bringing eCNY digital payments to the road. An expressway in the western province of Shaanxi now has a toll lane that supports digital yuan payments, with the first successful payment being made just last week. The Shaanxi government says digital renminbi payments will be possible at all expressway toll stations in the province by the end of September. Frankly, these are looking less and less like pilot trials and something that looks a lot closer to a soft launch in progress in China. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's check in on Bitcoin again. Okay, so the CoinDesk Bitcoin price XBX index is currently still trading at over $50,000. And the CoinDesk Ether price, ETX index, is trading at over $3,300. The DFX, CoinDesk's DeFi index, is trading at $729. So what is the catalyst for this Bitcoin and broader crypto market rally? Joining us now to discuss is Rachel Lynn, founder and CEO of derivatives decentralized exchange SynFutures. Welcome, Rachel.
Hi, everyone. Hi. Thanks for having me. Hi.
So, Rachel, let's just address the elephant in the room. What's going on? Why did Bitcoin finally go over $50,000 for the first time in 3 months?
Sure. I think for one thing is what we just now adjust the overall macro markets and with the expectation that the Fed easing might continue. That's one of the largest catalysts. And the other thing is that if you look at the news over the weekend or last week, you have Coinbase also ranking top in their download apps right now, and seeing PayPal UK also extending the crypto services to the retails as an indicator that newcomers might be growing interest in the space. I think one very interested indication that for all the professional traders to see is the futures markets and the funding market. If you look at the BTC futures market, it has growing, the outstanding open interest has growing from 11 billion after the May crash to right now about 17 billion. US dollars, while at the same time, the funding rates of the BTC futures stay very low. It's less than 5%. What does it mean is that people are not borrowing money and adding leverage to buy up the Bitcoin. This is very different from the May high, but instead it indicates that lots of newcomers and interest in the spots. That might be the reasons that behind the rise of the Bitcoins, and more healthy market is right now on the way. Yeah, thank you.
So Rachel, we're seeing some on occasions, like such as this weekend, as we discussed at the beginning of the show, large amounts of purchases using stablecoins. Obviously, they're doing these at like $200, $300 million at a clip. Who's doing that kind of buying? Where is that buying coming from? What's its source? Besides just it's institutional, but what kind of institutions? If it's not retail, who are they family offices? Are they financial institutions? Who are they? Do we know anything?
Yeah, we saw both family office, financial institution, but bear in mind that lots of financial institutions is acting on behalf of their clients. And what we see from the market here in Asia is that lots of family offices and high net worth individuals are getting very much interested in the Bitcoin space and the crypto space. So they do find ways to buy into the crypto, and they do, delegate to some of the institutions to buy for them. So ultimately, I think that one of the largest flow came from the interests of the family office and high net worth individuals. Yeah. And the other thing that to look at is, of course, lots of the financial institutions, they themselves haven't been allowed to buy Bitcoin themselves as a prop trader and a prop trading. That would require lots of approval from the internal risk managed financial institutions, and it would happen, but we haven't seen lots of such large amount of approval happening in the space.
Rachel, you just mentioned Asia. I'm curious if you have just what your guess is about what regions are driving this latest growth. Do you think it's a lot of this is coming from Asia, or if it's coming from the US or some other part of the world?
It would be both. From the Asia space is more familiar with. You could see that the crypto is gaining lots of interest with the rise of some Axie Infinities and some of the GameFi, and it amplifies itself, and it's kind of educational process for lots of retailers here in Asia. And secondly, with China's cracking down on Bitcoin and cryptocurrency back in May, lots of people actually paused their purchase. But 2-3 months pass, and people are starting to coming back to the markets with the rise of the Bitcoin.
Thank you so much, Rachel.
Welcome.
That was Rachel Lynn of Derivatives Desk, SynFutures. Coming up, the latest from the regulatory front with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Hello, Nick.
Hey, good morning.
So big news on the regulatory front is the House is returning to vote on the infrastructure bill. Tell us what's going on with that.
Yeah, in a couple hours, the House of Representatives Rule Committee is expected to convene and start figuring out how they're going to approach this. And the House should be discussing and debating this. Over the weekend, House Speaker Nancy Pelosi seemed to indicate that, whatever the House does, they want to have it wrapped up by the 1st of October. So we have about a month for them to figure out, if they're going to make any changes or not. As of right now, it kind of looks like they're still leaning towards not making any amendments to the bill, because that would require them to, send it back to the Senate for further negotiations. So the focus right now just seems to be on making sure there's enough votes to pass it as is, which in its present form would include the controversial crypto tax provision that the industry has been pushing back against for the last month.
So, Nick, is the fact that this is going to most likely go through as is, does it kind of point to sort of a weakness in the crypto industry itself to lobby Congress to get its way, if you will, in this kind of a proposal? Does it show that the crypto industry just now doesn't have as much bite as it might wish it did or thinks it does?
So I think that's really two questions, right? One is, on the lobbyist front. And I think, seeing how mobilized the industry became after the provision was first revealed kind of indicates that there is a thriving, group that's engaging with lawmakers. But, the way this provision was inserted, it was, the Treasury Department working with a handful of senators, and it was inserted, not last minute, but close to it into a 2,000-page bill. So it's one of those things where I'm not sure that any number of lobbying force could really handle. But as we saw, the entire industry got together, and maybe the broader conclusion is just where exactly do you engage with the lawmakers on this? Is it as the bill gets closer to completion? Is it, preparing, well ahead of time for something like this to happen?
Nick, anything do you expect to happen actually today?
Not really. So the House is convening, but right now it looks like the biggest questions that Nancy Pelosi has are, does she have enough votes to pass the bill? So a lot of it's just going to be wrangling, centrist Democrats that are threatening to revolt if, the bill's not brought before the $3.5 trillion Senate bill that's also being worked on. House progressives are threatening to revolt if the $3.5 trillion bill is not brought before the bipartisan bill is brought. So, there's just a lot of politicking going on in the background. And I think that's going to be the big story that we're watching for today.
Thank you, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Thank you, Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm Emily Parker. Coming up at noon is The Hash, then all about Bitcoin at 3. You're watching CoinDesk TV.